Hello guys, Shadir here. In this video, we are going to be looking at something very important. Last video, we have talked about the value investings, why it does not work anymore for huge amount of wealth building for the in the long term, and why it's completely sucks. And then also I got some of the response from them. So if you strict on this video, this video is all about how we can implement the independent concept of independent investing, as well as do the independent research, and how you can make the independent decisions throughout every day of your life. So before that, let's dive into already the previous video that we got the command from one of our viewers about uh, lots of misunderstanding on the investing concept, and as well as the fixed rules, and thirdly about some of the things that why value investing does not work. So these are the most important thing, so we have to be talking here. So the first thing we have to be looking here is so what do you mean by the fixed concept? So before we looking at the investing concept, fixed investing concept, let's understand what is specifically a concept. A concept is something, it defines in the word, a single words which occupy the goal, I mean the fundamental goal, and those definitions of the every features and everything that are occupied it is completely defined as the concept. If you look around it on yourself and your surrounding, you could look at the tree, on any places, laptops and tables and whatever the word we are saying as a word completely, each have the fundamental things of specifically achieving a purpose of goal, which those goal defines the meaning, and those meaning comes as the concept. And if we mainly talk about a whole sentence, something like I have apple, I defines as a word, but I defines the purpose, who, I identity. So that's become their purpose. Those meanings becomes one of the concept, as some simple concept, and have the meaning and the purpose to role play on the entire sentence. And apple have the identities and role play on the specific thing. So each object that's surrounded by us is everything is a concept. So like that, in investing also we have the concept to talk about it. So what is actually an investing concept? So a fixed investing concept. So I mean, first of all, we understand that most people think we only have a concept which is defined in the investing, which means any concept. I'm not talking about any concept that you used for investing, but the concept that you are following on your investing. Mainly, let's look at it. In investing concept, you take about the value investing mainly, who used by mainly by Benjamin Graham, and following through that Warren Buffett, and following through the Charlie Muggers, and as well as the fundamental goal of the specific investing concept to find the value of the company through the specific steps, by understanding the company, analyzing and studying the CEOs, and as well as studying the management, and finding the mode of the companies, is that anything they have in the advantage, and looking for phenomenal past growth, or how they have maintained their stable earning over time, year over years. So that's all influence the decisions by having the specific goal for the investing. So if you, instead of the Warren Buffett, if you take the Jim Simon, who used the quantitative investing, which mainly used in the math of mathematicals and statistical analysis, his goal is to find the inefficiency in the markets by completely grabbing and identifying the opportunity in the inefficiency of the market, and constantly making profits wherever there is a lack of inefficiencies that produce the entire market opportunities. So he would make the money, and it's completely a different subject of investing concept. It's not the same as the goal of value investings. And if you take another one person, something like George Simon, sorry, George Soros, who actually made a huge billions of dollars in currency markets, who actually made it in England exchanges. He actually highly focused on economical news and where the opportunity would be lies on. And based on that, he would find any of the stocks or any of the currencies would have the mismatch to their expectations of what they need to be worth to be extendably uh, stand as the fair value. So instead of that, they would find the existing opportunity. He mostly do the economical analysis, and based on that, his investing concept is completely different from how the person is actually doing as the mentors who most of the people who following the investing concept and the quantitative investing compared to him. And if you take another one example in the way of Cathy Wood, Cathy Wood is an American woman who actually made billions of dollars in the stock market. His investing method is not same as all of the one. He is usually focused on a tiny tech sectors who have the huge risk but have the 0 to 1 businesses which have the highest potential of hyper growth towards the future. So based on that, he would invest his most of the money on the highly beneficial, higher potential ideas to expect the hyper growth from his investment. But he crucially understands the business on its own way to find the existing opportunity in the market to make a multiplied huge amount of wealth over time. So whatever the okay, let's make it this enough, because we could able to see the large amount of people's case studies one by one if you look at it. But the main thing you have to understand, it's not every investors have different investing concept. Market have a different investing concept that introduced by some peoples, and that's the large amount of investors are following those different investing concepts. And each investors having a different perspectives on the same concept, individual perspective on the same investing concept of the way things. So these are the investing concept, I mean fixed investing concept. So where these fixed investing concept become a fixed, and why we call this as the that is sub rules that fix it inside of it. Because one of my viewers commanded that there is no fixed rules that Warren Buffett or Charlie Munger told it in any of the videos and recommended in any of the books, are they in those 50 years or something like that. So mainly we have to be clarify these spots, which is there is no nothing the Charlie Mungers or Warren Buffett or anyone who'd recommended and said that there is a fixed rules for the investing. The main thing here is what we consider as a fixed rules or a fixed principles for making an investment is when you take the value investing, when you are doing the value investing, first of all, you could have the a step-by-step approach, which a traditional approach that you never neglected, you could do for each and every company, no matter what. So that's become the crucial part here, which means first of all, most people go and search for the companies based on the sector. They filter out it. They look for the financial growth rate that actually meet the requirements in sales, cash flows, and equities, earnings, or whatever in last 10 years or whatever. So after that, you have the concept of looking for the more. And in investing, in value investings, there are investors introduced a different kind of modes like tall bridge modes and network modes and switching mode, lots of kind of things. But these are the modes, ordinary common traditional modes that has been looked in the businesses, but not differently in a different perspective. We couldn't look the mode in a completely different way, what is considered as the mode and what we can consider as the mode based on, without relying on these traditional path all the way around it. So the next step is looking for management. Is the management is good, and the CEO is good, how the managements are working, they have the great key peoples or not. So after that, looking doing the intrinsic value calculations and as well as buying under the margin of safeties. So if I say these concept, these steps is also applied in different steps are applied in quantitative investing, as well as the different steps is also applied in a Joe Soros how they made the investment, and also for the Cathy Woods how he made investment. So each of them have the different steps, and those steps are considered as the fixed rules, not in the fixed way, but in a constructively. You first analyze the company, or you if you first sorry first you understand the management or you understand the growth rate. It doesn't matter, but anyway you follow some steps along the way to make a decisions. So that doesn't going to be lead to accumulate the huge accumulated returns in the long run. You have to find a way where you can multiply the money ultimately to find the existing opportunity where you can in the current market. And nowadays you can able to find the existing opportunity where it's lacking, where the opportunities exist to multiply the money within a short amount of time for the huge amount of wealth. So these are the fixed rules, which means the steps become your rules, and you follow those specific rules without open-mindedly searching for further and further informations, without understanding independently why I have to give this much of importance for the specific information. Instead, we only look for the specific step of informations that only limited by our mind this would work or not. Yeah, so these would happen, but I welcome any of the suggestions, any of the contradictions you have. You can comment on the video below. And thirdly, I got the command from our viewers is something very interesting, which means you're saying that value investing we couldn't able to make money. I didn't say that value investing using value investing couldn't able to make money. You're definitely able to make money. Definitely, you can able to make money by 10 percentage, 15 percentage, 20 percentage returns over times, and you could be able to accumulate some level of returns for whatever you're investing in the long run. But I don't say that you can accumulate a huge amount of wealth of fortune you could able to made using the value investing uh, anymore, because millions of people are already using the value investings nowadays, as well as any other investing concept that introduced in the markets. But you have to be completely different if you want to. You have to find your own path. You have to find your own way to make a fortune. You have to if you want to build a huge amount of wealth like Warren Buffett or uh, Jim Simons and George Soros, and as well as Kathy Woods and different people who already made a huge returns with a huge amount of wealth with a different investing concept by their own way of philosophy. If you take, we already talked about George Soros, who actually used a theory of reflexity. Looking at the market in the theory of reflexities, where the market is reflecting on the base fair manners or with the irrationals, that to find the existing opportunity in a completely different way to understand and take the decision based on more independently, instead of relying on anything outside of what they have learned, but take those learning as an experience to model and to overlook on their experience. So third thing is, we already said, I already said that you don't have the problems on making money with value investing, but you have the problems on making huge amount of wealth. You're not going to be find someone who could going to be make a billions and multi billions of dollars through value investing by getting started with $1,000 within the next 10 or 15 years. So that's going to be the biggest hardest path nowadays, because already is a huge amount of people are starting to use, more than millions and millions of people all around the world started to use the same thing. So that affects the market in some in shaped way. So that would make the prices of the stocks and go ups and over, even if it's commits and sale only a little amount of times, it's get downs, and within a very short amount of time it automatically is started to go up, and we don't have the opportunity to buy more of the stocks with these specific rules and concepts. So that's become the crucially very differential parts that we could able to see today's. So finally, we have just finished what we actually seen in the comments from our viewers, what we got comments from the viewers, and we made the clarifications. And even if you have some of the problems or you have any contradiction thoughts, you can comment on below. So I'm ready to put on any of the informations and clarify those specific things and talk about my perspective on the following next videos. And now let's get into how we can make independent investing. So that's a bit different, right? We never seen and never heard the word anywhere like independent investing. How we can make the independent investing? In independent investing means you have your own fundamental assumption. Like if you look at the greatest scientists that already achieved greatest discoveries on everything, on every practical and physics, chemistry, and a lot of things, you mostly find greatly they have the basic fundamental assumptions of finding the truth After the finding the truth, it's nothing is finding the truth. It's once they find the actual high level of certainties on the specific assumption, they started to build the further assumptions to find the existing opportunity and to introduce to the world. So, if you want to do the independent investing, you have to open mindedly understand, take the experience and take the informations and model as whatever exists in our market, in investing market, as a value investing and a quantity analysis, statistical analysis, whatever the analysis you have. Take as a model, but don't exactly copy that and follow those specific thing if you want to make a huge amount of wealth. So the better thing is you can do is to uh, understand the market first of all, how the market is completely working, what is the purpose of the market, why. So the companies need to be make raise huge amount of capitals. If the companies need to raise huge amount of capital, where they are getting the money, they are getting from the stock exchange, but where the investors money is going on, who are the people are getting involved, how those informations and what are the things are getting on it, and what is the IPO, and how the things are moving on, and how much amount of the voting shares I have, what type of shares I'm actually buying, and how much rights I have, and how entire actual price or fixing for the specific shares, and how they are actually moving on over and over. So this is the whole constructible, how the market is fundamentally working on in the structurable way. And understanding, you have to understand the company in a completely different way, where we have the advantage, how we can understand the company with open mindedly looking for uh, what specific thing, the one thing that company would have ultimately next to give the huge amount of phenomenal growth in the next 5 years. If they have very destructive technology or a destructive food product, destructive recipes that make them highly stable and grow ultimately for the next 10 to 15 years, how? But you have to have the fundamental factual assumption that ultimately you can have the evidence or overlooking that this specific company is going to be ultimately give huge amount of returns in over time. So that's where you find the opportunity to multiply your money 100 and 200 amount of times, sometimes thousands times more than within a very short amount of times. For example, you can take the Tesla, you can take a Nvidia, you can take high level tech companies that nowadays, and automobile companies that nowadays exist in this earth, where you can able to accumulate a huge amount of money. If you want to invest in Tesla 2008, if you have some rules and specific things that we need to be invest in very stable company, you never get the opportunity to invest in the Tesla, because already Tesla is in 2018 bankruptcies, and when they give them to the APO, that is still the problem is just existing on. So you never get the opportunity to invest and buy at the great price. But if you fundamentally understand the assumption, you see the specific CEO as a great, and you find the product is completely destructive, and you see the huge amount of potential growth, and you clearly know how those specific companies going to be achieve those amount of phenomenal revenue over time, and that's spike the investors behavior in the market, and that leads to the higher price per earnings for each shares. So that's like you have to find something which is what you believe that this specific company is going to be. Even if you find something, you have to understand that the specific person who running this specific company is capable of it. And even if you have you I mean something like you have to measure on yourself how you can see the pathway, that how you can clearly see how you can multiply the money 500 times, 1,000 times within a very short amount of times. So that's become the new value investing concept for us, and that is independent. You are not depending on anything. You don't know. You made the research on your past company with a different look, and you looked for it. You studied open-minded. You find something is completely different, that distract you and advantage for them. But when you analyze the new company, you don't look for the same thing, but you open-mindedly observing the informations and finding what they have something as a special, that they could able to make a huge amount of advantage and a huge amount of revenue in the next 5 or 10 years. So that's how you can find the huge opportunity to multiply your wealth over time. I'm only talking about building a huge wealth here. I'm not talking about making money. If you want to make some returns, or I just want to get a 10%, 15% with including minus of the inflations, you can just put it on in investing, value investing, land investing, and you can do the same like whatever the investors and today introducing this book and in the same way. So the second thing is, okay, I understand and see the clear pathway that one company is going to be highly profitable in next 5 10 years, and I betting my certain amount of portfolio of the capital on the specific companies because I have the certain assurance of 90 or 95% assurance that this company would be very successful in next 5 or 10 years. But I just want to know that I can make an independent research or not. So that's the biggest challenge, right? Because we always prune and we always trapped in the way of in the shape of thinking by putting into something what we already wired off looking at the some object in the same way. We have to be very careful on how we make it a research. So whenever you look at the research, whenever you look at the independent growth rate, whenever you look for the mode, whenever you look for the managements or you're studying the management and the company's goals, don't possess any of the old way how you made it. Just be open minded, try to be look in a different perspective. Why not something would be different? If you don't see the CEO as a capable of doing this business and handle these all these operations in one businesses, and but the CEOs have a great teams and the teams are the capable of as a mode for this company because they have the key people already working in some industries, but those specific things as advantage they can take care of everyone who's in the market, so that become the greatest advantage for them. But if you know that specific thing, be different. Okay, if you know that and you have the evidence, you can clearly see that they can able to do it, and you see where those specific advantages coming from that product or ideas or whatever, you can take an advantage to make a bet. But don't look at that speculations completely in different manner how you can make things works out. But it's going to be completely great industry. So but finding those specific things is completely hard because independent investing is hard. You have to think it in independently in your own way. Not every people could be able to do that, but you have to do it in your own way. So that's what leads to your independent decision, which means I believe on one substance or one something of the particles or product or service or anything that will have the capability of the great teams, and those great teams have the great capabilities of achieving these amount of revenue in futures based on those specific things. So based on the value investing, I have said that, and if you look at the quantitative analysis, it's completely a different perspective. So like that, you have to be not to be followed on the same level of concept, but broke the traditional way how we look at the market and looking for the existing opportunity where I can find and look for something completely in different manner where I can achieve the greatest returns over time to build a huge amount of wealth. That will lead you to multiply the money than you ever expected. No, ever. So the final thing is, how did you know that you made an independent decision or not? How did you know that you made an independent decision? Mainly, for example, you read the four books in the investing concept, in the value investing, whatever that has been written in by any kind of authors that has been taught by in market. So you already know and you understand that the specific books teach you if you want to buy the company, buy under the margin of safety at 50%, 40%, and you following those specific concept as a rules. Okay, so in that case, if you don't find those specific opportunity, you have the differently a nature of the business that doesn't you can able to buy at the margin of safety, but the business have the potential to grow huge level on the upside, but it is never going to be get down because of the competition of the demand that you couldn't able to get that shares, and you find that the specific price is completely fair to pay at that. Even if it's come down and down, you can accumulate a huge amount of shares over and over. So if you believe it and you can decide on it without following the traditional path, whatever the things are has been introduced in different books, and you take as simply as a concept of model and simply as experience, not to be rely on it, but to be as experience to make a clear decision. So that's is changing the path of how we made an investment. So that's where I made an independent decision. I don't rely on anyone. I can learn and understand the company. But if I find the opportunity where where the certain companies have the greater future, I bet on it. For example, let's take in a KFC. KFC have 6,000 restaurants all over the world. For example, I'm saying for the example, okay. So now how, and I see that clearly that the KFC would have 12,000 restaurants all over the world in next 5 years. So that's the fundamental assumption. But I have to test my assumptions on my own way, how they are going to get it. How, where is the demand, and most of the things questions when you started to look in an independent way. But most likely if you like the investing concept and as well as the quantity analysis, everything is said as something, it's same way. It looks like we are doing in the independent way, but if you look deeply, you could find, you could able to find that is something is missing. You have to be understand on yourself to find something indifferently, not same like an other investor, other investing concept, how they may have invested. But if you want to make money in the same in the safest way, or like a 50%, 10%, you can able to make it. But if you want to build the wealth, you have to find a different way to accumulate the wealth. Multiply 500 times and 100 times. But deeply about how we can look at the investing concept in completely in different manner, how we can find that investing concept on our own self, how we can discover something on each company, how we can make that, and how we can do the independent research in very deeply, without relying on how we can verify those three things. We can look at it on the next videos. So as far as the informations I given, if you have any contradictions, if you have any thoughts, leave it on the comments so we can discuss. Yeah, so I also talk those specific things in the next video. Thank you, bye.